Hey everyone, welcome back to the channel. As many of you know, there's two ways that Fundrise gives us returns on our investment. The first way is the dividends, and I made a video about that actually 2 days ago. So please check out that video up here and down in the description below. The second way that Fundrise gives us returns on our investment is through appreciation. So in this video, I'm going to explain everything there is to know about appreciation. Coming up. If you're new to the channel, my name is Trey, and I'm a real estate, stock, and crypto investor. I'm also a swing trader. So if you enjoyed my content just a little bit, please click that like and subscribe button. I'll greatly appreciate it. Alright guys, so we're gonna use my real estate heavy portfolio for today's example. So we're on this page, which is the home page of the Fundrise. And if you look on the upper left side, you could see where it says returns. Now again, as I mentioned before, there's two ways that Fundrise gets us our returns. It's through dividends and appreciation. So before we get started, let's define appreciation. What is an appreciation when it comes to real estate? So appreciation is defined as the increase in asset value over a certain period of time. So for example, that you bought a house 1 year ago that was worth, let's say, $100,000, and today it's at $130,000. Now appreciation is not like dividends. Dividends go directly into your pocket right away. So it's realized profit. Appreciation, on the other hand, is not realized right away. So in order to get appreciation or to actually realize the profits, you would have to sell the property, right? So what happens is, if you still own the property, you could say that, hey, it was $100,000 before, now it's $130,000. So you technically have these $130,000, but until you sell the property, it's not real. It's an unrealized profit. But that means it could fluctuate, it can go up or down. So that is what appreciation is in terms of real estate. Now in Fundrise, it's a little bit different because you don't directly own real estate. You own funds in a portfolio, so you don't directly own a property in New Jersey or a property in New York or a property in Texas or California. You own shares of the fund, and inside that fund, there are numerous types of real estate properties that Fundrise purchased and they're trying to improve, get rental income from, or they're trying to sell. So until you sell those shares of that fund, any returns that you get in terms of appreciation are unrealized. As you can see on the left side, we have dividends, we have appreciation, and my all-time profit in appreciation is $2,452. Now that number can fluctuate based on the economic environment at that point in time. So for example, when the COVID-19 epidemic hit, the appreciation actually went down by about 2 or 3% for a very short amount of time, and that is because no houses were sold. Real estate was in a decline. The prices were going down. No one was buying houses, so the sellers had to lower the price, and that caused the appreciation to go down. Right, but fortunately for us, right after after the economy started recovering from the pandemic, you saw 20 to 30% price increase in real estate, and you could see this in Fundrise appreciation as well. It fluctuates, as you can see, it fluctuates based on the economic environment. If it's bad, the value of real estate goes down, and when the value of the real estate goes down, the actual price per share of that fund that you're investing in with Fundrise goes down, so therefore your actual appreciation goes down. So it's actually a lot easier understood with an example. So what we're gonna do is, we're gonna go to my portfolio here, and this is my real estate heavy portfolio. We're gonna click it here. We're gonna click where it says real estate, and we're just gonna take any of these interval funds. When you put money into Fundrise, you put money into these funds in eReits. You do not directly purchase physical real estate, right? So you purchase shares of these funds, and as we will see in a second, these funds, inside these funds, there, tens or sometimes even hundreds of real estate projects in there. So let's take the biggest fund that we have here, which is the interval fund, and we're gonna click on it. Right, so as you could see here, there's a lot of detail, right? And what we're concerned about, so actually let's just go over each thing that you could see here. Cost of shares owned. So this is how much money that I put out of my own pocket without any returns into this fund, right? Now, this is quantity. So what is that? That is how many shares of this fund I own, right? So how many shares was I able to buy with that $23,239? And I was able to obtain 2,236 shares of this specific fund, which is called the interval fund. Right? And over here, this is actually a really, really important thing here. It says current NAV per share. Now, NAV stands for net asset value, right? So this is the price per share. Kind of like you could imagine you have an Apple stock and the price of one share of Apple, let's say it's $100, and then, a year later it's $150. It's the same thing. This is what this is, current net asset value per share. Currently it's $10.86. However, this fluctuates, and Fundrise does a really great and unique job that no other private real estate crowdfunding company does, is they update this price per share somewhere about on a quarterly basis, right? Most private real estate crowdfunding companies don't even update this because it's hard for them to calculate the value of this certain fund. How much is this fund worth? There's a lot of public companies, right, and they're able to get this price per share more accurately because they're traded publicly, so people can buy and sell these shares millions of times a day, and then they agree on a certain price. When you're a private company like Fundrise, you're not able to do that because this fund is not publicly traded. So they do a lot of research in the background, and they come up with this price, and they actually update this price quarterly, and that is where your appreciation comes from. Now, you can lock in a certain price by selling your shares or selling your position in a specific portfolio in a specific fund. That's the only way to lock in a certain price. So, for example, the current NAV price per share is $10.86. If, let's say, another virus comes in 3 days, this can go down to $9 and your appreciation will go down. Now, let's say something positive happens tomorrow, a positive catalyst, this can go up to $20. Now, if at $20 you say, hey, I'm done with Fundrise, I want out of this fund, I want out of this portfolio, you will lock in that price and you will be able to get that appreciation. You'll be able to realize that appreciation. Until you sell your shares, this is unrealized profit and it can fluctuate. Unlike dividends, they become realized right away. They either get reinvested back into Fundrise, or they go straight back into your bank account, and you pay taxes on dividends right away. Believe it or not. With appreciation, you do not pay taxes until you sell the funds. So let's go to the next part here. Estimated value of shares owned. So this is what happens. So we could see the current price per share is $10.86, and I have 2,236 shares. If you multiply these two numbers together, you will get this 24,288. So then, if you do some math, right? You take this 24,288 and you minus the price that I originally paid for it, which is $23,239. You will get this number here, $1,049. That is how much appreciation I earned through this fund. Now, guys, remember that this fund is only 46.1% of my portfolio. So there's other funds or eReits in that list below, which you could do the same type of analysis, and you could see how much appreciation you're getting, how much price per share for that specific fund, and how much you bought it for, and how much it's worth now. So what I was saying before is that a fund is not a direct ownership in a certain real estate, right? So a fund is kind of, imagine it like You know, if you're familiar with ETFs or mutual funds, right? ETF stands for exchange traded funds. So if you know, in the regular stock market, if you know a ticker like QQQ or SPY, those are not specific companies. Those are funds. There's many companies inside that fund. So if you scroll down here, what you're going to see is that in this certain fund by the name of Interval Fund, we have 30 projects. Okay, and as you could start, if you scroll down, we could see that we have a couple of apartments here in Florida and South Carolina and, Georgia and Texas. And what happens is one of these projects gets completed and Fundrise sells it. The share price of the entire fund will go up. So let's say on a certain specific day, this apartment development here in Florida, let's say Fundrise finished and then now they want to sell this, right? So we're going to assume that when they bought this apartment complex in Florida, it was lower price than it is now. So they made a certain profit, right? So that certain profit will make the price per share of this entire interval fund go up. And then when the price per share goes up, you make a certain amount in terms of appreciation, and that is how it works. So the same thing would happen. Let's say this single family rental here in Texas, let's say there was some sort of a hurricane and out of nowhere this area is just not desirable, the school district is bad, there's some sort of gang activity or something bad happens, right? And out of nowhere this rental property becomes worthless, or becomes worth less than it was when Fundrise purchased it. So what that will do is that, let's say Fundrise says, hey, we cannot do much more with this property, we just have to sell at a loss. They would sell at a loss, and that would bring the entire price of this whole entire interval fund down. Therefore, the price per share of the entire fund will go down. And when the price goes down, appreciation will go down as well in our portfolio. So that's where I mean that this appreciation, the returns from appreciation, can fluctuate based on the economic environment. So if you scroll down, you can actually see all the projects that are here. You can go even to the next page here. Let's say you just click on a random one, you click view details. It tells you, gives you all the pictures, it tells you the strategy, the location, projected returns. And if you scroll down here and you click on it, this is actually every time they acquire a certain property and they add value to it, or they try to upgrade it, what they do is they actually tell you what kind of risk this property, this investment has, and expected timing, like what are they gonna do with it, when the projected returns are, and they have a business plan and everything. So you could find out what you're investing in, but you're investing in a fund which has many properties. And a lot of the times they purchase different types of properties. They could be one property with high risk and one property that's low risk. So they try to counterbalance these things in order to make a solid portfolio and a solid fund that will generate us great return. Thank you for watching. I hope you enjoyed the content. If you did, please click that like and subscribe button, and make sure to check out my other Fundrise videos down in the description below. Thank you so much for watching, and I'll see you in my next video.